Clark, hey, real quick.
Hey, what? You would think all our years together that Jamie would know when we're rolling.
I missed
He's
the
still ad
cue.
libbing. He's still ad libbing.
Missed the cue there. My bad. Sorry.
Yeah. Welcome, episode 7. Thanks for hanging out. I'm Chad Anderson, that guy who, we got to forgive him. He's only been out of broadcasting for 13 or so years, so not a big deal. Is it about 13?
Oh, about
no,
8.
You did some other stuff.
Yeah.
I think some cheeseburger money is still owed to you. But
I see what you're doing, Chad. You disavow any broadcasting that wasn't with us. So it's almost like, when your favorite player gets traded from your team, those other years don't count whatsoever.
No, not at all.
Yeah,
not at all.
Yeah, I see.
No, we forget. It's not really broadcasting unless we were doing it together on a Friday night.
Absolutely.
At
Madison City School Stadium. Oh, man, some great times.
Some epic moments. I actually, for those of you, a few of you have actually commented that you remember us doing high school football, and I actually have an archive of all those audios. One of Tim Mayer, but we got a lot of different audio that's actually in the archives that we could roll out. So anybody used to listen, Bob Jones people, Madison City people, whatever. If there's enough, I actually could share that and post that because some of that stuff is great.
And it's timeless. It never gets old. It's always funny. That would be awesome. Maybe a clip a week. Of the week.
Maybe we do some flashbacks. Remember player of the game and the play of the game. We're way off topic here about houses, but we used to back then. We didn't have a setup to where a producer could grab the audio, save it, and then play it as a highlight later in the show. So the way we recreated, Doug Franz was the one who started this. The way we recreated the play of the game is we sat there and paused, and then we recreated it live as if it was happening again in front of an empty field.
Absolutely.
And maybe it was hammed up or embellished a tad here or there in the post-game show, but that's for you to decide, I guess.
Chad, I don't know if you remember Goldsmith Schiffman Stadium. Every time we went into that place, we just looked forward to getting out. But
I don't think it's still there, is it?
No, I don't think so. I think it's been converted into
a Waffle House.
Yeah, or maybe something more safe than it was back then. A maximum federal prison, something like that, maximum security. That they left the barbed wire up. It was already there. We were playing Huntsville one year, and I don't know if you remember this or not, but I went. This is when Doug and you were doing the games, and I was a statistician. I stuck my head out the window to see the time of the touchdown on the clock. Right as the Huntsville cheerleaders were firing hard plastic footballs into the crowd, and I took a football to the forehead right between the eyes. And that evening, that was the Tenders play of the game.
I do remember the Tenders, where the chicken is kicking.
Yeah. Yes. And Franz, at the end of the broadcast, when we recreated it, he said he didn't know what was worse. The fact that made play of the game, or that during the recreation of the live broadcast, that I actually took the football and hit myself in the head with it when we were redoing it.
That was great. Some of those nights, man, those were fantastic Friday night games. Tenders. There's also a great, we'll have to bust out the clip where Jamie does an ad read for Alabama Framer in Madison, but sounds like he just got off of a night shift of the 1-900 number. But
well, I think
that's all.
Yeah, I think they had to pull the ad because, after 30 seconds, you were up to $14.99 in fees. So I think that's why the ad got pulled shortly after.
All I know is one listener one time told me that they heard the ad and they had to go out back and smoke 3 cigarettes before they could get back to watching the game. That's all I know.
I don't know if it increased Alabama Framer sales, but they sure were enjoying it.
They were.
Clark.
They were. Yeah, absolutely. All right. Speaking of sales, let's talk about house sales for a second. So we've gone through 2 episodes. Sorry to get on that 4 or 5 minute tangent. Hopefully, if you don't care, you fast forwarded through that. But we talked about, okay, I'm ready to buy a home. Now what? That was 2 episodes ago.
Yep.
Previous episode was then talking about the amount of money that you spend that you may not realize or know about in getting into a new home. So what I mean by that is when you buy a house, you go under contract, you have to give an earnest money deposit. That money is due up front, which is generally approximately on average 30 days before closing. So you have to give that money then. The next thing you have to do is you have to, most likely, and I highly recommend it, you get a home inspection done. And so you hire an inspector, and that person goes through the house, and they charge you like probably a flat fee or per square foot or something. They go through the home, make sure everything's working. They point out any of the defects to the house. Hey, might want to look at this, and they categorize them: minor, medium, major, or red alert, whatever. And then the last thing is the appraisal. You have to pay for the appraisal. And that's what, gets the appraiser out to the home, and they inspect it and make sure it's working from a lender's side, and they give it a value, and hopefully it comes in at what you said you were willing to pay for it. But that's how the first or the last 2 episodes went, and kind of gets you through from, okay, I'm ready to buy. Now what happens? So now we're into the loan process at this point, because if you've paid for the appraisal, you're into the loan process. But today, Jamie and I wanted to talk about closing costs, because you said you were going to surprise me with it.
Little closing time by Semisonic.
This is what we ended the show with last week, talking about this one. So Jamie had it nice and queued up for tonight. So with closing costs, this is something people miss. And we really jumped ahead without talking about it because it takes place during the negotiation. So when you decide, but we wanted to kind of compartmentalize some of these things to where it makes more sense. So when you buy a home and you do the negotiation, part of the negotiation is who's going to pay closing costs. 2 things have to be paid for at closing, and that is your down payment, if you have one, because there are 100% financing options out there, 0% down. So down payment, though, is 1. 2 are closing costs. Closing costs have to be paid at closing. You can't finance them into the loan. I know there are 1 or 2 exceptions to that rule, but they're such small one-off exceptions. I don't want to get into those because it's not the norm. I want people to understand and have the right expectation. The other thing is that they are negotiable, meaning the seller can pay all of it. The seller may say, screw that. You pay them all if you want to buy my house. You may meet in the middle. All right, I'll pay half, you pay half. Hey, you pay $7,000, I'll cover whatever's left over. Give me $3,000, I'll cover whatever's left over. And that usually comes with what kind of a market it is. If it's a seller's market, they're probably not going to pay anything. If it's a buyer's market, seller's probably going to pay for the majority. And if it's in the middle, then it's going to depend on where the house is, how hot of a commodity is it, where's it located, what school systems, what condition, what age, how many other people are involved, how long has it been on the market, all these things. So Jamie, let's go back. You guys, when we've talked about this, using your example, got an unbelievable steal. But when the closing costs came up, before you and I talked about it, did you have any idea that that was something that, okay, on top of my down payment, I also have to come up with all this extra money?
We knew the closing cost existed. What we didn't quite understand, though, or know in detail, was how much would it be? How is all that calculated? And how is it, figured? We knew the market played a role in that, not to the extent that we know how markets play a role in it now that you just explained, but we weren't sure if factors such as our readiness to buy plus the seller's readiness to sell could also affect the closing cost on top of the market. So we knew a little bit to know that was coming, but didn't quite know all the intricacies of it until we got farther along in the process.
So one thing I like when you're talking, and we'll go over what the closing costs are here in just a second. I personally like to finance as much of them as possible, meaning I would rather pay more. Here's why. Let's do the math real quick. If you're buying a $300,000 home and you have to put 5% down, okay, $15,000. Let's say that there are $10,000 in closing costs for the transaction. Okay, well now 15 guaranteed has to come out of your pocket. All right. Let's say though that the seller and you are going back and forth, and the seller's like, hey, I'm only going to pay $5,000. Well, that's half. One thing I like doing is saying, well, what if we pay you $305 and you just pay all of it? So now your purchase price is up $5,000, right, to $305, but the seller pays all 10. And you may go, well, then I'm paying more for the house. So I'm really just, well, of course you are. But the reason I like financing it is because I always want to hold on to my cash. Mm-hmm. I want to hold on to my cash as much as possible. Do you know on average what that $5,000 would cost you in terms of a monthly payment? Any idea, Jamie?
No idea.
Take a guess.
This is like
cliffhanger on.
Yeah, it's like Ken Chambers. Ken Chambers asking me this question. Ask me the question again, Chad. I think I jumped across the streams there.
All right, if you increase your mortgage or your purchase price by $5,000,
gotcha.
How much does that impact your monthly payment? How much does your monthly payment go up?
I think it'd be fairly low, $20 to $30 a month, if that.
$30. Yeah, look at that.
There we go.
So, would you guys rather do a $300,000 purchase, put 5% down, $15,000, split the closing costs with the seller, meaning you got to come out $5,000 more, so it's $20,000? Or would you guys rather go 305, 5% down, and that comes out to what, 11,250? No, sorry, I can't even do that. It's 15, and oh my God, that's horrible math. I had food poisoning.
It's contagious, Chad. Whatever I had a few minutes ago, you caught apparently.
I had food poisoning yesterday. It's 15,250. It's like, how could it be 11? We went up in price. It's the struggle. When you're recording and you're food poisoning, it's bad. So 15,250 is what your down payment. So you go up a little bit. So it's 4,750. That you end up kind of saving, quote unquote, because $250 extra on the down payment. But if that payment only goes up $30 and you only come out $15,250, would you rather have the extra $4,750 in your pocket, or would you rather pull that out of your pocket but save $30 a month? Well, just don't go out to eat one time per month. Like, shave that if the $30 is the difference. If $30 is the difference, you may want to reassess the house you're buying too, because $30, while it's still 30, is only $30 at the same time. So that's kind of my point on some of this stuff. Also too, in real estate, you're buying an appreciating asset. So the thought is the home is going to outrun any money I roll into it by doing that, right, with the seller. The only negative or step back to this is, what happens if the house doesn't appraise for 305 and it only appraises for 300? Well, then you're back to square one, and you and the seller got to work that out. And they may even say like, hey, we'll do this, but if it doesn't appraise for that, we're going to hold you to the 300 purchase price or something along those lines. But that's kind of the key with these closing costs, is that they're negotiable. If you're going to end up paying for them, I always like to finance them, because you're buying an asset that's going to go up in value. And so it'll take care of itself. And that's just my opinion, because whether you finance it or whether you pay it out of pocket, people say, yeah, but you pay interest on those closing costs. Yeah, but you also lose interest on money that you give to somebody else and don't hold for yourself to put into a market account. So, arguments can be flipped both ways. It's just my preference. It's not an exact science.
And, I think from a personal finance standpoint too, that helps folks who maybe they don't have a lot of money on hand, a lot of extra cash. So being able to pay more upfront and roll that into the finance, along with what you mentioned earlier, if the deposit or the down payment rather can be rolled into finance, that to me extends people's options based upon their own individual situations as well.
Yeah. And that's such a great point that you bring up there, that we haven't even gotten into other costs that people need to be aware of. Utility deposits, moving costs, you're going to get in a new home, and guess what? You're going to want to spend money. You're going to want to do accents. You're going to want to furnish. You're going to want to buy new whatever. You're going to want to do the man cave. You're going to want to do the she shed. You're going to want to do all those things, right?
Appliances, all the other things you have to have too, in addition, the needs in addition to the wants.
Yeah. I mean,
yeah.
And that's just it. And the house will obviously come with some things, but you're still going to want other stuff. And there's going to be that urge to buy, or that urge to do the 0% interest credit cards at Best Buy and Lowe's and whatever. And you're going to rack up debt. You just are. That's the way it works. So anyway, let's get back to closing costs. Sorry, what expectation wise, like, did you have any idea the amount or anything, or just I've heard of these, do I have to do these or what?
Yeah. When I remember asking you, something along the lines of, Chad, we got closing costs coming up. We've done the earnest money. We paid for the appraisal, paid for the inspection. What might we be looking at from a closing cost perspective? And you were able to roll out the different scenarios to us, and we went with the one that made the most sense for us. Again, it was a different market back in 2010, as we've covered on earlier episodes, but I think there's a way, no matter what the market is, or the time frame, or even the personal situation for buyers, is to work with their agent and work with the lender to make it make sense for them, because the last thing you want to do is feel bad about an investment that you're going into as a home buyer. So those options, all of the options on the table, you gave to us, and we worked together to pick what was best. So that was our experience. I was never afraid to ask you any questions, as you can vouch, more than once in many occasions, because I just wanted to make sure I not only understood it, but that not only that Diane and I understood it, but that we could use that information to plan and see it through the whole way.
And is this what I mentioned a minute ago? Like, do you go with that? Would you rather have $5,000 in your pocket and save for the sacrifice $30 a month to have $5,000?
Absolutely, because as you mentioned, you can cut that out. Yeah. You get $30. I'll give you an example. There was a subscription we had that's about $30 a month.
Okay.
And I thought, man, I really like this subscription, but it's $30 a month. And so I started weighing, how much do I want and need it, as opposed to, could I cut something else out that I care about less and make up the difference? And I could. It was a no-brainer, just, budgeting 101 right there. So to me, you'd rather have that money in the pocket, but also not everybody has that amount of money available. So I think it's just more comfortable, and it's financially more smart to look at those different options. So absolutely, to me, it's a no-brainer. And even if you do have the money available, why not keep that money in your pocket and invest it, or have it for later? Because it's one of those things, in my opinion, Chad, you don't miss it. You're not going to miss that 30 extra a month.
Right.
If you've got your budget in line, and if you never missed it to begin with. One of those things, kind of out of sight, out of mind.
So the way you think, you may say, okay, well, how do we know what to ask for? Going back, when you're negotiating, that's when this comes up. So when you're negotiating your contract with the seller, then that's what's going to happen, because you're going to get pre-approved. We talked about that. And when you get pre-approved and then you hone in on a house, well, then you come back and you start talking, and you go to the lender, hopefully us, and you just say, hey, like, all right, what are closing costs going to run us? Because we're going to tell you, are you prepared for closing costs? How much money do you have? We get the realtor involved. Like, what are we thinking? What's the strategy? Let's say the house is 400 and you're going in. Okay, well, we're going to do 5% down. Okay, well, they're going to say, generally the question needs to be, well, what about closing costs? Somebody's going to bring it up. And that's what we're trying to teach you here, is that if nobody does, which we would, but make sure someone does. So you bring up the closing costs, then it's all right, well, let me run the estimate for you. The key, though, as well, is that people need to understand, with closing costs, we are simply doing the best thing we can possibly do, and there are going to be variables. Meaning, with the variables, we don't know what your insurance is going to be. We can estimate it, but we won't know that until you go talk to an insurance person. And they can't give you a quote until you have a house picked out. So you can kind of do that and whatever, but sometimes some of these pieces have to just get going and are in motion. And it's a lot of times, depending on if there are other offers, especially hard to collect all the data and get so precise on the front end that you're more doing. And that's where that comes in. Now, what I generally do is there are a lot of costs that are fixed and just are what they are. And then there are other ones that, we go to a title company's website or we do some research and have our calculators and pull stuff up and kind of give you an idea. And then we can put together a sheet that spits it out for you. But that's what happens with a lot of these. And so I tell people like, hey, on the front end, this is what we're assuming. So if your insurance comes in high, I can't help that. If the HOA dues or the HOA contribution or something like that comes in higher, I just don't know that yet. If there's a fee that comes up later, don't crucify me because we're trying to get an offer put together and I'm doing the best we can as fast as we can. So the key though to remember is that it's all negotiable, but you can't agree to closing costs and then later come back and be like, hey, we found out this is more expensive now. Can you bump that up a couple of grand? Appreciate you. Like, can't really make that happen. So anyway, that's kind of how it breaks down. And, market wise, Jamie, I know you've been in your house 13 years now, but have you heard anything story wise with, I don't know, friends, people in your neighborhood, seen things kind of sell here or there, or talk to anybody? Like when you're just kind of talking, does closing costs really ever come up?
Not all the time, but one of the things that I remember talking with my daughters about when they purchased their homes not too long ago was ask about closing costs. And one of the things that I think also, Chad, people don't always understand is what do closing costs refer to? Like, what are the different costs that go into closing? So you hear something about closing costs. The most common thing I hear is either buyer's going to pay closing costs or seller's going to pay closing costs. Try to get them to pay for the closing costs, if you're a buyer. But that was something along the way that we learned a lot about. What exactly does closing costs, what do those costs refer to specifically?
So, yeah, that perfect segue. It's like you've broadcast before. Perfect segue to get it wrapped up and kind of, finish this segment or this episode as we kind of go down the trail of home ownership here. So when you're talking about the closing costs, you get what's called a loan estimate. First page of the loan estimate breaks down the terms: purchase price, interest rate, monthly payment, property taxes, insurance, has some loan details, number of years, fixed payment, all that stuff. That's page one. Page two breaks down all the closing costs for you, and it's divided into sections. Section A is for the lender. That's where they charge you discount points, an underwriting fee, an origination fee, a processing fee, those kinds of things. Those fees, sometimes referred to by people in the industry as junk fees, they are actually fees where people are working on your loan. So does an underwriter necessarily cost $1,195 per file? No, but there are other people who are working with the lender, and that $1,195 goes to more than just the underwriter, but they call it an underwriting fee. Same thing with a processor and so forth. Section B is you're going to get into, these are some of the necessities that go with the loan to make the loan doable, possible. The appraisal, that's in there. A final inspection in case the appraiser has to go back out a second time. A flood certificate to verify you are or are not in a flood zone. Tax service fee, verification of employment, credit report cost. All those are in the second section, section B. Section C is for your closing attorney, their settlement fee, their title insurance, and we can go over that, down the road too. Title exam, title search, deed prep, doc prep. Basically, Section C is what is the cost of the closing attorney and their staff to do everything, get it set up, and provide insurance on your property. Not insurance for a tornado or a fire, which, by the way, Jamie has some epic footage of storm from last week. Glad that missed you, though, guy. Yeah. Glad you're able to do the show tonight.
Yeah, Dinah's like, I'm going in. Do what you need to do.
Yeah, Diana sent you and Buffy out, and then she went inside.
Yeah.
Section C, though, the insurance, title insurance, that means that if there's what's called a lien out there somewhere, that the title company is saying, look, we've checked everywhere. Nobody has a claim to your house, but here's the cost for insurance just in case something's out there that we missed. And that's it. And so basically it just protects anyone from being able to come back and make a claim on your home. Then second column, section E, you have recording fees, transfer taxes, and so forth. That's your county and your government and your state. The next setup is what's called prepaids, which is your homeowner's insurance. You got to pay that up front for a year. Mm-hmm. It's prepaid interest for the remainder of the month that you purchase in. Section G sets up your escrow account, taxes and insurance. Section I talks about Section H talks about any other fees, which would be the HOA, owner's title insurance, some things like that. And that's what closing costs are. So when you add them all up, like, it does get costly. And people who do an $800,000 loan, it doesn't always seem that expensive because a lot of the costs are fixed. So $1,000 underwriting fee on $800,000, well, pretty small potatoes.
Yeah.
$1,000 fee on $150,000 house, it's a big chunk. So some of these costs are fixed, and there's not a good just flat number to quote. That's why it's important to have someone actually break it down and go through it with you. Say like, all right, well, here's kind of our good faith best that we can come up with ballpark estimate. So did Jocelyn and Seth, did they talk about, I know you mentioned that to them, but
yeah,
did they even know what some of those things were? Because sometimes you hand them the sheet and they're like, I don't even know what this is.
Yeah, that was their second house they had purchased, but they were still unsure of all of the details. And you brought up an excellent point there. Some costs are fixed and some costs in closing are variable. And that's something else that they didn't know and that we didn't know. Robbie Parker didn't even know until, you walked us through that when we purchased. So I think it's things like that. You hear closing cost a lot, but nobody can really know all that goes into it until they're informed about it. So I think that's why this episode has been so important, because there's so many components to it. But when you break it down, Chad, it all makes sense.
It does. Any final thoughts? I felt like I got on rambling soapbox there for a second, but this is one of those that, again, we go back to it. I get fired up in situations like this because think about it, right? Kent Chambers told me how to do a logarithm. I don't know how to do that today. I'd fail that miserably. Okay. Nobody else between Chapman Elementary, actually, let's go Madison Academy, Chapman, Liberty, Discovery, Bob Jones, Alabama. Nobody taught me to be prepared for closing costs in a mortgage. That blows my mind. It blows my mind.
And today, so we try to step in and inform people because it's not something that's part of the regular curriculum. But man, it's so helpful to know in everyday situations like buying a home. And that's where we want to break through anybody who's hesitant or maybe a little bit shy even to ask questions about their personal finance or the process. We get it. Been there, done that, and we know what it's like to not know. Chad, you're an expert at this. Coming from a buyer perspective, I learned so much from working with you, and I'm learning even much more by us doing this together and then relating it to personal experiences like when my daughter's purchasing their home, when we refinance, things like that. So it's good to be, man, how good is it, Chad, if we can arm people with this knowledge ahead of time?
Yeah.
So that the decisions they make are the most informed and best decisions for their situation.
Yeah, absolutely. It's wild, but is what it is sometimes too. I mean, it's kind of crazy, but that's the world we live in. So I hope these are informative. I know sometimes these videos, not everybody has 20, 25, 30 minutes. I do recommend though, sitting down and saying, you know what, we're going to watch this on 1.5 speed or something. I don't know. Just do something.
They may seem like chipmunks, but we know what they're talking about.
Yeah. I mean, at least we know. Yeah. At least we know at that point. Right.
Yeah.
So just keep that in mind. That's a big deal. Big deal to us and making sure people understand and whatnot. All those things. So anyway, all right, do us a favor over there in the top right corner. That's all the socials. YouTube, Twitter, Instagram, Facebook at This Chat Is Real. You can do us a favor, hit the bell, like, subscribe, download, follow, share, comment, DM in the comments or in the description of the video, depending on which platform you're on. There's a calendar link. You can set up a conversation with us, 10 minutes, 15 minutes, an hour, talking about Friday Night Football. We can do that too. We got time for you. If you have questions that we want to help you with, we can answer those and kind of get everything going in the right direction for you, or at least put a game plan together.
Yeah, we definitely want to help. And as Semisonic themselves said, closing time, open up the door. Let your right into the world.
I feel like you were more excited about that than closing costs leading up to this episode.
I'm not going to lie. I made sure I had that thing queued up, ready to go. Ready to go at the start of the video. That's really why Chad's fired up, everybody. He heard that song, and he hasn't come down from the high since.
Hey, is that the number that signs off after your 1-900 change machine run out?
Well, they may know who they want to take them home. When they hear that commercial. But I will say, Semisonic closing time. You can get that on their greatest hit album.
Look at you plugging Semisonic over here.
Well, but greatest hit, Chad. They had
greatest hit. Okay, greatest hit. Got it.
Yeah. I'm not getting any residuals from Semisonic. They probably need all they can get. So.
Okay. All right, guys. Thanks for hanging out. I hope you've enjoyed these 7 episodes. He's Jamie. I'm Chad. We'll catch you next week for number 8. Take care.